Mortgage assumptions. We're seeing them all over the place in agent listing remarks. But do we really know what it means as a buyer and as a realtor? In this video, I'll be going over the concepts of a rate assumption, what you need to know as a buyer, realtor, and lender, why are they important in today's market, and the advantages and disadvantages of a rate assumption, so that you can understand exactly what a rate assumption is and use it to your benefit, and do my best not to make an ass out of you or me. So let's dive right in. So what is a mortgage assumption? By definition, a mortgage assumption is a financial transaction where the borrower takes over or assumes the seller's mortgage exactly as is. This means that the buyer takes on the existing interest rate, repayment period, remaining balance, and any other terms that come along with that mortgage. So in short, that means anyone that had qualified for a mortgage loan and purchased a home in the past 3 years is probably sitting around a 3% interest rate. That gives that purchaser the advantage to carry that interest rate forward along with the terms that are still left on that loan. Let's go over why it's important to a realtor. As a realtor, you're trying to sell properties in a market where it's really tough to gain any kind of traction because of higher interest rates. By placing the mortgage assumption qualification in the actual agent remarks, it's letting additional borrowers know that this property would more than likely come with a much lower mortgage payment if they qualified for the mortgage assumption. As a realtor, your first step in a transaction should more than likely be to get with your seller so that they can contact their current servicer to find out what exactly are the terms of their assumption. This is important because the buyer will still need to qualify through the current servicer in order to accomplish the full mortgage assumption. In regards to why it's important for a borrower would obviously be the lower payment. For a mortgage lender like myself, there really isn't an advantage to doing a rate assumption because we are totally out of the process. And you're probably wondering, why are you even talking about it? Well, the reason is I've been getting many phone calls and inquiries regarding mortgage assumptions. And in order to qualify, you would have to reach out to the current servicer of the current loan. It's also important to understand that you do have to be qualified based on the current servicer's criteria. And one of the biggest and most important factors to opting to complete a mortgage assumption would be the need to bring additional funds to make the sellers whole. And what I mean by that is if we look at a scenario where consumer is selling their home for $400,000, and let's say they have a $300,000 balance left on that note, in order to assume that loan, you've got to bring the $100,000 difference to closing. And in many cases, you're not able to get a second lien loan for these. So the funds have to come from you or a gift of some sort. This is the piece that most realtors and borrowers miss when they get excited about a mortgage assumption. So we're going to talk about why this is so important in today's market. Based on the average interest rate in the United States, we're looking at about a 7.875 all the way to 8.25 interest rate. That rate on any mortgage is going to be a daunting task and sometimes a payment shock to the actual consumer. So having the additional funds that allows you to participate in a mortgage assumption is definitely an advantage. Also makes that property much more marketable and enticing for future buyers. Now, talking about some of the advantages to this, obviously, lower rate. You would fulfill the remaining mortgage terms on that note. So if there's 27 years left, you're assuming that loan at 27 years and still have to pay the remainder of that balance throughout the life of the loan. And the only real disadvantage that I've come up with to this is the need for the additional funds that we discussed. Again, more than likely you won't be able to find a second lien. So in turn, you'll need to come up with those funds as the buyer, and as the realtor, you need to understand the concept of this to be able to articulate that to not only your seller, but also your buyers. That's so that they don't get their hopes up thinking that their payment is going to be much lower than what the mortgage lender that pre-qualified them provided. Now, I hope this short video gives you a little bit of insight as to what mortgage assumptions are and how you can use them to your benefit.